Welcome back to Market on Close. I'm Marley, Kayden here in Chicago alongside Sam Vadas at the New York Stock Exchange. We'll close out this Friday's show with some thoughts on today's session and the week on the whole. First, of course, the tariff news. We got a swath of new tariffs today, 100% tariff on any branded pharmaceutical. This is a move the president says will incentivize drug companies to move manufacturing operations to the U.S. Also, kitchen cabinets and bathroom vanities will see 50% tariffs after October 1st, and heavy trucks will have a 25% import tax. Now, U.S. and European pharma stocks held steady on the news of this, but Asian pharma stocks did slip. We also saw Packer, who's the maker of Peterbilt and Kenworth trucks, jump on the news as a U.S. based maker, and also Wayfair as well jumped on the news as an online furniture retailer here. And of course, Intel was a constant story and at top of mind for all conversations, gaining 20% this week after keeping its name in the headlines and at or near the top of the best performers on the S&P. The latest reports say Intel's in talks with Apple and Taiwan Semi about potential investments and new ways that those companies can work together. Those were some of the standout stories for me. But Sam, what caught your eye during this week or even today's trading session?
Yeah, well, I think away from sort of the top tier economic data, some of the other macro points were really telling. We were talking to Bob about this earlier. I thought the views on the economy were quite interesting out of the University of Michigan Consumer Sentiment Survey. The index falling to 55.1 from 58.2 as people are still clearly worried about high prices and jobs. Now, that marks a slide back toward that low that we saw in April when you could argue we were at peak uncertainty around those tariffs. Now, inflation expectations did come down a tad, but they still remained elevated. There was a bright spot, however, those with big stock portfolios feeling better about things. But heading into next week, Marley, what will you be looking out for?
I will be watching the jobs data that we'll be getting. We'll get quite a bit of data on the state of the labor market. We'll have job openings on Tuesday and then the jobs report on Friday, assuming that Congress can reach a deal to fund the government before it's set to shut down on Wednesday, Sam. If they cannot reach that deal, we will not get that jobs report. And also the president has told federal agencies to be prepared for mass firings if the lawmakers can't make an agreement in time. But that particular data is so important, knowing that the softening labor market has been the primary concern of the Fed in terms of its dual mandate. And it could really inform what lies ahead in October, especially in light of today's inline PCE. How about you?
Yeah, it's really getting down to the wire, isn't it? No doubt the jobs data will be telling, but if it's not already a busy week with the labor data, we're also going to be getting the release of a lot of PMI surveys. So we'll be getting an update from here in the US, but also key reports out of China, which I look at very closely, and also the Eurozone. And these are important because they do give us some insight into really the health of global manufacturing, and particularly at a time when there is just so much uncertainty around tariffs. Once again, they were back in the headlines today, and remembering that some of the trends have actually been showing us that some of the production has been coming off, as we've seen a lot of that front loading is now sort of easing. So remembering the flash PMIs that we got the other day here in the US did show those input costs did stay elevated as companies are really struggling to pass these on to consumers. Now, that was the flash PMI. We will be getting the ISM next week, and you know, these are largely sentiment-based surveys, but they are very, very good forward-looking indicator for growth, which will also have implications for the dollar. Obviously, Marley, we have been watching this weakening, this sort of depreciation against other currencies, particularly the euro, and that's why, you know, looking at some of these data points out of regions like the Eurozone is very, very important, because we have seen areas like European equities, Asian equities outperforming, and that really has been down to some of the strength of the currencies versus the dollar as well.
Absolutely. And you know, we've seen the EU end its rate cutting cycle as we may be entering one. And, you know, as I'm looking at next week's calendar, Sam, we are going to get a lot more Fed commentary, kicking off with Christopher Waller, who I'm sure will have something intriguing to say. Beth Hammack from the Cleveland Fed will also be speaking. Atlanta Fed president. Those are all on Monday, and those are all big names known for speaking pretty fervently and publicly. So, you know, in the wake of some of the data that we have coming and some of the data we've received, could certainly shed some light on what we're going to expect from the Fed in October. But that is going to do it for us today on Market on Close.